Today, there is a challenge I want us to navigate together. Yes, all the times I've asked for trial balances, I've found people supplying me with balances that have repeated accounts. So whenever I look at such, I know the problem doesn't originate from the trial balance. It originates on the setup, on the chart of accounts setup. Before we go into the details, I want you to know, especially the students, the fresh accounting graduates who need training in the software, especially QuickBooks, please contact us. We are Jovima Digital Consultants. We have a Jovima e-learning platform. You can learn all this because any mistakes that is committed at the beginning will always reflect at the end in the reports. So let's get the solution before we actually meet the problem. Let's today set up a chart of accounts. Remember, we have a ground principle when it comes to accounts. We have this accounting equation where we say assets must be equal to liabilities plus equity. Of course, equity has these other categories. We shall see it. So let's start with the assets. Assets also have two major categories. We have the current assets and we also have the non-current assets. So the current assets, we look at the short-term assets or the assets that can easily be converted into cash, which is based on the level of liquidity. And when we are classifying them, we start with the high liquidity, the assets with the high liquidity to those with lower liquidity, that is, to those that take long to be converted into cash. So the other category of assets we have is the non-current assets, the fixed assets, the long-term assets, like the property, the land. We shall look at that also at some point. Today I wanted us to focus more on the chart of accounts and how do we set up this chart of accounts. Let's look at the level of liquidity. As I said, when you're looking at the assets, we shall say those that are solely liquid will be on top and those ones that are more fixed will be at the bottom. That means we shall have cash appearing first in the non-current assets. We shall have these bank accounts because they usually have our money, we just go and withdraw. We shall have trade receivables. We shall have inventory, prepaid expenses. We shall have equipment. We shall have furniture and building coming into the lower part, the lower end of it. So what are we going to do at this point? We are going to classify, to give them codes, to number them according to the level of liquidity. For example, our asset takes code 100, 100. So we shall say our cash will be 101. We shall say our bank account will be 102. Then we say our inventory will be, trade receivables will be 103. Then inventory will be 104. Then we shall say prepaid expenses, those are still current assets, will be 105. Then accordingly, if you have those short-term investments based on your entity, because I'm giving a general overview, but we may vary based on your entity. So let's go to the fixed assets. Then we shall say equipment, then furniture, then buildings. So equipment, we shall continue by saying equipment 106, furniture 107, then buildings 108. Those are assets. Then let's get to the other side of the story of the liability, because I know the equation says asset is equal to liability plus equity. So the liabilities also have two classes. Remember, liabilities is what the business owes. So they have the current liabilities and they also have the fixed or the long-term liabilities. So we shall say let our liabilities take code 200. We are now building the chart of accounts. Students, be alert here. Accounting professional graduates, especially those ones who are just joining the industry, who are looking for experience, who are trying to learn the software, the systems, let's train you, and also take use of these videos that we drop free of charge. Please learn from the videos. If you come to our training platform, of course we shall take you into more detailed. Whatever I'm giving you here is more of generic, just a general overview. So if liability is 200, which is 200, so we shall say current liability, accounts payable is 201. Then we say Salaries payable is 202. We shall say taxes payable, like pay as you earn, VAT with the holding. We shall say, okay, let it be 203. And we say loans payable, let it be 204. Then if we have long-term, like mortgage, long-term liabilities, we can also say, 205 accordingly. We are building the chart of accounts because I see so many mistakes whenever I ask for a trial balance. You just see transport, travel, and ground transport, flight, and you just look at the balance, the trial balance, and you know there is a problem with the chart of accounts. So let's set this up today. Now, let's go to the equity section. Of course, equity section immediately we look at the owner's equity. Let's give equity section a code 300, and we say, okay, 301 is owner's capital contribution. Then we say 302 is owner's drawings. Those are distributions. That's the money they take from the business for their personal use. Then we can say 303 is retained earnings. That is the net result of the profit and loss statement. So we shall have that set that way. And the owner's interest shows the interest in the business, how much the owners put in business and what they expect. That shows us our true interest in that particular business. Remember, when you talk about interest, we are talking about monetary interest. So let's go to another item. Now we are trying to break down the statements. Let's go to the profit and loss statement, and let's go to the income statement. Let's start with the revenue. This is money earned. And now at this point, I'm talking about accrual basis. I know some of you use cash basis and accrual accounting, but this time around, we are saying money earned. Whether received or not, we are taking it in general. So let's give that revenue a code 400, and we say sales is 401. Let's name service income 402. Let's name interest income 403. We are trying to come up with the best way to easily know which category am I supposed to record which transaction. Then let's go to the expenses. Of course, this is also broad when you talk about expenses. Expenses are broad, but in this, let's talk about them briefly. Let's give them a code 500, and we say this is money spent. This is money spent from the business into purchases and every other item. So let's say expenses 500. So let's say 501 rent, because most of the businesses are renting. A few businesses actually own their buildings. So 501 is rent. Well, let's say code 502 is salaries and expenses. Yes, because every employee wants to be paid at every end of the month or every end of the day. So let's look at code 503 to be utility expenses, because we know every business incurs this, especially internet, communication, airtime, if they have that kind of a setup where I have company calls. So utilities takes another, place. Let's say 503. Let's say 504. Let's say there are suppliers expenses. That's where I have office supplies. It depends on the nature of the business. Let's say 505. Let's name it like insurance expense. Then 506, let's say depreciation expenses. Or 507, administrative. But which administrative expenses? Maybe where I can have meals and entertainment. Like all the expenses you may have. So what am I saying here? Let's classify the item first and subdivide. We get these subcategories. This will make our trial balance look one, neat. Number two, it will help us to categorize items accordingly to their rightful positions. Then it also helps you to avoid duplicates. I've seen someone recording a transaction at a certain account. Again, they record another one on a certain account. You usually find issues in balancing your trial balance because you have errors of duplication, commission, errors of omission. You have a lot of challenges with the trial balance, but usually it starts from the chart of accounts. CPA Jovia Nakaima, Jovima Digital Consultants. Thank you.